Welcome to BigONE Weekly News Update. I'm Mia. Bitcoin surged to an all-time high last week, even as global markets were rattled by renewed trade tensions and fiscal concerns. The leading cryptocurrency briefly hit $112,000 before settling near $109,000, gaining 3.5% on the week. Ethereum, ETH, and Solana, SOL, also rose 4.6%, closing at $2,550 and $175, respectively. Altcoins like Cookie, Lista, and WLD followed suit, and Binance Alpha's airdrop further fueled retail momentum. In contrast, traditional markets stumbled. U.S. equities fell after former President Donald Trump threatened tariffs on the EU, Apple, and Samsung. The S and AMP Wink with tongue sticking out 500 dropped for a fourth straight day, ending the week down 2.61%. The Dow and Nasdaq each lost 2.47%, while the Stoxx 600 in Europe declined 0.75%. Meanwhile, the U.S. dollar index hit a monthly low as 10-year Treasury yields climbed to 4.51%. BTC briefly tumbled over $4,000 from its peak on Friday amid a broader sell-off triggered by Trump's tariff threats. Market sentiment eased somewhat after Trump delayed the tariff deadline to July 9th. Still, the episode reaffirmed his commitment to using tariffs as a strategic tool. Tensions were further escalated by the proposed One Big Beautiful Bill Act, which lowers remittance taxes for non-U.S. citizens but authorizes new taxation powers over foreign entities, potentially deepening trade disputes. At the same time, the U.S. House passed a tax cut bill and a sweeping budget proposal featuring extended tax relief, higher military spending, and a $4 trillion debt ceiling hike. This move is expected to widen the fiscal deficit by up to $4 trillion over the next decade. Long-term bond yields in the U.S., Japan, and Europe spiked, reflecting rising concerns over debt sustainability. With monetary policy options constrained, loosening stokes deficit fears, tightening dampens growth, investors are turning away from long-term government debt. Foreign investors are exiting U.S. treasuries, while Japanese debt sees domestic selling and foreign buying. Bitcoin, meanwhile, is beginning to act more like a safe haven asset. Capital is flowing into BTC and gold as traditional bond appeal fades. Institutional buying, ETF inflows, and firms like MicroStrategy, MSTR, continue to support the rally. On-chain metrics and global liquidity indicators remain strong. As macro instability grows, Bitcoin is increasingly seen as a refuge amid economic and geopolitical uncertainty. While volatility remains, BTC's strengthening correlation with safe haven assets and sustained institutional demand suggest it could hold firm, provided traditional markets don't face a severe correction. Join BigONE today and take advantage of the growing cryptocurrency market.